Welcome to Inside the Deal. I'm Suzanne Stevens. I'm here with Howard Lanser. Howard is a Director of M&A for the middle market investment bank and financial services firm Robert W. Baird. Howard, you guys published the Global Merger Market Review, and the numbers are not good for the year, but what can you tell me about deal volume?
So far, year to date through 2008, we've seen a decline of about 38% in M&A deal volume in the United States. But when you actually break down the months in the fourth quarter, November was one of the most difficult in record. In fact, if you look at the deal volume in November of 08, compare that to November of 2007, we're off 86%, and that's a very chilling number.
Yeah, it certainly is. And we know a huge part of that problem is the credit market is
Absolutely.
not there. There's no financing available. So the banks got bailout money, but they're not lending. What's the problem?
Well, if you look at the reserves right now at the Federal Reserve, it's spiked about $575 billion. Meaning, exactly to your point, the capital's come into the banks, but the banks aren't lending because, quite frankly, they're afraid. They don't know what's going to happen the next couple of days, let alone the next couple of weeks, to their balance sheets, when the next write-offs are going to come, when the next shoe is to drop. So they're hoarding the cash instead of lending that out. And so that is a fundamental problem with the injections of capital that we've seen from the Treasury and the federal government right now, is the banks are holding on to that capital instead of getting it out into the lending system.
Okay, what's going to change that? Because before the market gets better, the banks have to start lending again.
Absolutely. Well, eventually banks are going to start acting like banks, and that the way they make money is by lending money. And if you look at the rates, even in the M&A deals that are getting done, they're extraordinary. And these are rates that lenders have not seen in years, if at all. I mean, we're talking about senior debt at LIBOR plus 600 for very good deals, senior debt. Mezz debt coming in at 18 to 19%. These are very attractive yields, very attractive rates. Eventually that will attract capital back into the market. And in fact, in the middle market, we're actually seeing new firms pop up, new pools of capital in response to these high yields and in response to these high interest rates being made available to M&A.
So what are buyers doing in the meantime? I mean, some are raising capital. I mean, do you expect a resurgence of deal making once the credit market thaws even a bit?
Yeah, I think there's going to be deal making in any environment. And what we're seeing is a resurgence in strategic activity in particular. You have to remember that in 06, 07, and actually probably most of 08, U.S. corporations were achieving record profits. The well-run, well-capitalized businesses, those that have conservatively managed their balance sheet, have strong cash balances, this is the perfect time to be considering M&A as a corporate finance tool. It makes the buy versus build decision probably a little more biased towards buy. When valuations are coming down, there's a smaller competitor who has an emerging technology, has an emerging market position that you want to take advantage of, and now to use M&A, use your cash that you have on your balance sheet to buy the smaller competitor, or perhaps a competitor who's in trouble themselves, having over-levered. This is the opportune time to go down market, go into the middle market perhaps, and pick off a competitor that will achieve scale and synergies and position you for the upturn.
And when do you think we'll see actual growth in the M&A market? I mean, we're still seeing activity as you're mentioning,
right.
but when will we see some growth?
I think we're going to have to see a stabilization of the economy, without a doubt. And we're seeing and hearing people saying that kind of the second half of 2009 is when they expect the economy to turn. At that point, there's going to be a lot more confidence in the CFO seat, because right now, trying to ask a CFO what his projections are for 2009 is a very difficult question. It's very hard for them to ascertain what their year end is going to look like next year, which makes it very difficult from a valuation perspective to put a valuation on a company when it's hard to get projections from the CFO. So from that perspective, the average recession has been about 10 months post-World War II. The longest has been 16 months. So if we've been in a recession since December of 2007, we're already approaching record level territories here, unfortunately. But we at Baird are kind of projecting the recession to moderate and perhaps kind of come out of recession by the middle of 2009. And at that point, we expect to see the banks become more comfortable lending. We expect to see corporations now being able to project and hit their projections, giving them much more confidence. And then we probably would expect to see M&A volume to pick up. Again, not as a frantic pace as it was in 07, but we do particularly see it picking up sometime probably second half of 09.
Well, we're looking forward to that.
Absolutely.
That time for sure. Howard Lanser with Baird, thanks so much for coming by.
Thanks for having me.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.